Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. We are super that we just continue to pull some amazing, really is high quality investor, somebody that's done some amazing things in real estate, 175 single family and small multifamily projects with, just on his own, no syndication. And then additionally, figured out how to acquire a large 90 plus unit multifamily apartment complex, again, with no syndication. And so we are going to get to learn today from Mr. Sergio Pejoves. Sergio, thanks for joining.
Hey, thank you. Happy to be here in your show, and I'm here to bring content to your show and hopefully help other fellow investors, to really scale on this business.
Yeah, man, you're going to drop some nuggets and some gems. For anybody that's listening, grab a pen and a piece of paper because you want to learn how Sergio did this, because he came to the U.S. in 1999. He had about $400 in his pocket, and now he has about $20 million worth of assets under management. So he is one of those case studies and stories that you want to learn from. And we are just super excited to have him on our show. So Sergio, I know that, you came to the US back then, 99. You've been doing some amazing things, man. You originally were a mortgage originator. You did rehabs of high-end flips. You did some residential boutique developing, and now you're in these multi-million-dollar apartment complex and portfolios. And your story is just amazing, man. Why don't you, I'm gonna turn it over to you. Give us a good introduction. Tell us who you are, what you do in your own words, and let's get started.
Sounds good, Abel. Well, it's been a long journey, 20 years in this country. It has given me a lot. Came December 99, and I came with a vision, a dream. And since I was a little boy, I always see myself really, progressing and doing great in life. I got very good inspirational, like my parents, were hardworking people, and back in Peru, that's where I'm from. So really, really inspirational. Their hard work, and since little I was exposed to that, to that hard work. So that's the only thing that I knew. Just work for your dreams. And so yeah, my brother, invited me to come to the U.S. in 1999. He was a mortgage broker. So I started doing telemarketing, and I worked with him for 2.5 years. I'm very blessed that he gave me the opportunity to come to this country. If I have a little accent, I'm sorry, Abel. I'm Spanish, speaking.
You're good. You're good. So you're from Peru? Is that what you said?
I'm from Lima. Yeah, I'm from Lima.
Lima.
Born and raised.
Me and my wife got to spend some time in Peru a few years ago. It was amazing. We went to Miraflores. We went to the desert, and what is it, Huacachina, I think.
Yeah.
We did the sandboarding on the mountains over there, and we got to see Chichen Itza, and it was just your country.
Machu Picchu,
is
Machu
beautiful.
Picchu.
Yeah,
you went to Machu Picchu.
Not Cancun. That's another trip. That was another trip in Cancun we went to.
Yeah,
Machu Picchu in Peru. I mean, everything was amazing. Everything was amazing. Your country's beautiful.
How was the food? Do you enjoy the food?
Oh, man, the seafood was outstanding. I've never had better ceviche ever. So many different types of, but
Yeah,
That's
yeah,
awesome,
yeah.
man. Well, we
It's
don't
a
mind the accent, my friend. We don't mind the accent
okay.
here.
Well, born and raised in Miraflores, so the place that you visit, that was I was
For real,
born.
that was
Yeah, I
it,
was like that was my neighborhood. That was my hood.
man.
Oh, so
We
many
stayed in a
stories.
beautiful spot, and the water was right there, and
Oh my
it was
God.
amazing. Yeah,
Oh
that's
wow.
it.
Well,
That's small world,
a small
small world,
world,
my friend.
actually one of my trips, I went to visit my mom, my family and my parents, and there was a development right in the corner, right next to where my mom lives. She still lives there actually.
Hmm.
And there was this big billboard, it was a corner. It used to be a big, beautiful homes over there. And there was a big billboard, new development. And I went into that little kiosk, sales post, and I said, "What are you guys doing here?" I said, "Oh, we're going to do a high rise and this and that." And said, "Okay, I'll be back." So I went to the bank, went to the ATM, put out $500. I said, "Okay, here's my deposit." And the rest is history. It was a big risk because I didn't know the developer. I mean, I was just
Yeah,
going there
yeah,
for a few days, and it turned out good. I mean, they built, and and yeah, it tripled my investment. That was like 10 years ago, and it tripled my investment. So it was a
yeah,
just to in parallel, we were been talking, but
yeah. That's awesome.
yeah, just one of those things. But after working with my brother for two and a
Yeah,
half years, I wanted to get aggressive into real estate, and I worked with another mortgage company, and really she only had like two loan officers, and we expand that company. We ended up being like 50 employees. So we worked together and pretty much from the ground up, and it was a good run with her, and we were closing a lot of loans. And remember it was the top of my career doing mortgages, and then in 2006, it was like, okay, I was in El Paso, by the way. That was my first city when I came here to the US. It was in El Paso.
hmm,
So I
hmm.
just didn't feel, as you know, I'm from the beach, I'm from Miraflores. I'm not from El
Yeah,
Paso, but
yeah,
I mean, I had beautiful experiences over there. I really, I did very good over there. But I needed a bigger city. I needed a bigger city. So then 2006, actually, my brother also moved to Houston. And, then I joined him after he left. And then the whole 2008 crashed, right? I mean,
yeah.
I
Were you
remember seeing,
investing in real estate already
no,
then,
not,
here
not,
in the
not at
U.S.?
that.
Not yet.
Well, at that time I was doing loans, and then I think I had two or three rental properties. And I remember when I was working with Floor after my brother, there
Hmm.
was this guy that popped into my office, and I had the first office that you walk in, and he said, "Hey, can you have a minute?" And I said, "Sure, come in, have a seat." Young guy in his early 40s, and he said, I want to refinance one of my properties." I said, "Really? Okay, that sounds good. I'll help you. I'll do a refinance loan for you."
Yeah.
And then he said, and I asked him, "How many properties you own?" And he said, "I own like 36 houses." And I'm like, 36 houses. Oh my
Yeah,
God. At that moment, I mean, that young guy, I'm in my 40s. I'm still somehow young,
yeah,
but I was like, oh my God, 36 homes. And I said, "Why do you want to refinance? Don't refinance. I'll buy it from you." So bouncing back and forth, I make that deal right there. That was my first rental property. That was my first rental property. And
nice.
I bought it for, I think, 52. It was worth 70. There was a
Yeah,
tenant already in place.
yeah.
And at that time, you have your NOOO, not owner occupy 100% financing. It
Yeah,
was a
yeah.
mortgage, where
It
you
was a
were getting
different time.
90%.
Yeah,
Different
different time.
times, different times. So
Yep.
I was able to do my first loan, myself. I did my own loan,
As the
in-house.
originator, I love it.
Exactly. I
Yeah.
disclosed everything, of course, to the
Uh-huh.
bank, that I was doing my loan. And I got 100% financing. The property was cash flowing $200-300 already, and that was my first rental. So
Mm.
I started slowly buying real estate, slowly getting into the notion, and but that was an inspiration from that gentleman walking into my office and say, "Hey, I got all these properties." I just couldn't believe,
Yeah.
just so young, and
Yeah.
accomplished so much real estate, his own. So
Yeah.
that was one of the stories, and anyhow, and then I moved to Houston, and 2008, the whole market crashed, and I remember sitting in my office with this pile of loans, and I just couldn't close them. I was getting those emails,
Yeah.
that the lenders were just they were going belly up, and
Mm-hmm.
it was very rapid. So I took a break. I remember when I went to Lima, and I went to Lima to kind of like rebrain. What am I gonna do? You
Yeah.
know, and on my way there, I remember I read this magazine, and it was the Real Estate Wealth Expo. I don't know if you went to that Real Estate Wealth Expo in New York, but
No,
I took the
I've
page
never, but
off.
I know what you're talking about though.
Yeah, and this is a cool story. And then I took the page off, put it in my pocket, and I said, when I go back to the US after this trip, I want to go to that convention. It was a 3-day convention. The main speakers, Tony Robbins, of course, you
Mm-hmm.
know,
Yeah.
Robert Kiyosaki, and Donald Trump. Those were the main speakers.
Yeah.
Oh, it was like 20,000 people on the audience, huge networking. It was a life changing. For me, Tony Robbins really inspired me to be the person that I'm today.
I love
Oh,
it.
I mean,
I love
really,
Tom. Big Tony Robbins fan too.
oh, huge. For me, it was like a game changer. It's just like, just take the fear out of you, and then he will play with the audience, and make you scream and talk to the guy next door and then just lose. And for me, it was like, wow, the power of connecting with people. It was just amazing. It's really a breakthrough experience. And a lot of people that follow your show, I'm sure that they've seen Tony, but it was really, inspiring, very
Yep.
inspiring, very powerful, very powerful. So then I went to those conventions, and started learning about wholesaling and fix and flip, and I submerged myself on that. So I started doing a lot of fix and flips in the suburbs of
Yeah.
Houston, in the Spring, Katy area, and also doing some wholesale. So I was connecting with brokers and real brokers, and trying to get off market deals. And that was my main thing, when I was trying to find leads, and a lot of people do this, send postcards, to motivate sellers, go get the list. I get it, it's good strategy, but you want to get also another 10 postcards in the mail.
Yeah.
So I
What
thought
age
that,
were you when you did this? When you started?
well, probably 32. And
Okay.
I mean, I came to the US, I was 25.
Got it.
So there was a few years, doing mortgages, and then I pivoted into real estate, right, in
Yep.
2008.
Hmm.
So I was in my early 30s.
A lot
So
of us, a lot of us that are investing in multifamily apartment complexes and big deals now, a lot of us started in single family. So I'm just putting a timeline together, but that's awesome. So how long did you do all of this, all of the single families, wholesaling, that mailers,
sure.
distressed properties? How long was that run?
So from 2008
Hmm.
all the way to 2018.
Okay.
That was my biggest growth, into finding, what is going to be really my why. You have to
Yeah.
find your why, right? Your passion. I
Hmm.
always love real estate. I enjoy mortgages, but it was
Yeah.
just very transactional. And
Yeah.
I needed it to do something that it was like I enjoyed and I loved. And, my mom was a fashion designer. So I had those, elements of, sense of color, of design, space, and I think that, you know, I was, I don't know, I think I was good at it. And I
Yeah.
was doing, I was doing a lot of fix and flip in the suburbs. And then in 2012, uh, I was like, am I gonna continue doing this fix and flip? So many, like 15 to 20 properties a year. It just seems very repetitive.
Yeah.
And it was your typical cookie cutter 3-2-2. It's good to start with that.
Hmm.
But I thought that, why not just do less developments, less fix and flips with larger projects,
Hmm.
like bigger size budgets,
Yeah.
I felt that I gained experience to do that. So then I went to Houston Heights, which is a very cool neighborhood, where there's a lot of 1920 bungalows, and there's a lot of addition, new construction, craftsman homes. And I remember finding this little bungalow on one of the streets, called Archer, and it was off market. And then I called the owner, and we got into a contract, and that was my first high end fix and flip development. I
Yeah.
bought it for 80,000. I put 70, and I sold it for 320.
Hmm. Hmm.
And from 2012 to 2018, I built this company called Project Bungalows. And I still
Mm-hmm.
have my website out. And I did all these high-end rehab and new constructions in Houston Heights, and we sold multiple projects a year, 3, 4 projects, but we're like custom built project, high
Yeah.
ceilings, open concept. I mean, it was just beautiful. I really loved it,
Yeah.
and there were 2, 3 other builders in the area. So we really were expanding because it was kind of like a transitional neighborhood.
Yeah.
And that was my experience on the high end fixer uppers. And so all the money that I made, all the proceeds that I was doing while doing all these high end developments, I started buying real estate.
Yeah.
I bought more
Okay.
single families. I bought, another Aplex. I started building my portfolio, and
Yeah.
before I knew, I was like, okay, I have all these, already rental properties in Houston, and I felt that I was just also being distracted, on the daily operations on my rental properties. So it was a point where I said, okay, am I going to continue buying, one at a time, or I scale?
Yeah.
Should I sell off these and do something else, or continue with developments, or should I really scale into the cash flow business, through
Yeah.
multifamily?
Mm-hmm.
My daughter was born, and I think that kind of sparked me and say,
Yeah.
the fatherhood kind of kicking on me.
Mine
And
too.
I'm
Mine
like,
too.
is it?
Yeah, mine also. I have a 3-year-old and a 1-year-old now, and I'm like, oh, I'm like ready to go. Fired up. I'm ready to
I know it
extra
was an
motivation.
instant extra
Yeah.
motivation, and know that I need it because I'm very motivated just by, just I'm super motivated, But
Yeah.
when she was born, it was immediately. I mean, it's just look at her. It's like, okay, what's gonna be my legacy? Cash
Yeah.
flow. And
Yeah.
it was instant, and then in 2018, I decided that I want to, move into, the cash flow and, and multifamily, and just kind of like move towards the cash flow versus being transactional in high end rehabs. So 2018 were my last. Sorry, I'm getting a little message here. It was my last development, with Project Bungalows. So I sold those projects, and in 2018, I came across this broker that he approached me and said, Sergio, I have this portfolio of 105 units. And I was like, okay, that's interesting. So I got the numbers, good cash flow. And where are they? I said, I mean, they were like in Wisconsin, and, I said, okay. I went to the airport. I flew over there the next day. I mean, it's like that.
Yeah, let's go.
Let's go off market. We drove all the properties. I mean, at least 80% of the properties, and
Yeah, which is
it was
probably
like
a feat, man. What a
a
feat.
lot of work. I mean, it was
Yeah.
a lot of work, and um, so at the end of the day, we end up. So just give me 1 second, honey.
No problem. No problem.
Sorry. There's some background noise here. So anyhow, the 105 units. So I end up. So this is what we did, because there were so much property, we end up splitting it. And I used a bridge loan. I didn't syndicate, I didn't bring partners. I wasn't used to it. I was doing all by myself, as you know. And so I talked to the seller and say, hey, we're gonna split it into two. I'm gonna use a bridge loan for 70 units, but the other ones remaining, they're gonna be, you're gonna do owner terms. So negotiating back and forth, I got the deal. I used a bridge loan, financed the whole thing, and I only put $100,000.
Holy moly!
I know, on the owner terms. So it pretty much almost 100% financing. Almost 100%.
I'm gonna pause right here because this is awesome. How many houses did you have before you were getting into the 100-unit portfolio?
Probably I have 25.
Okay, so the 25 that you bought,
so I have 25.
That was primarily your money, and you were doing. You were
always.
like,
it's always been my. I mean, I remember I was doing developments.
Yeah,
I was buying.
But how did you do 25 houses? Is the question?
Well, I was buying them cash. You remember, I was doing high-end rehabs. So I mean, these are like good spread. I mean, I don't want to throw the number out there, but I mean, it was like one development could have give us, 200,000.
Okay,
So you
gotcha.
close 2, 3 a year.
You
I
have
wasn't
it in
doing
your
volume.
hand. That's your active capital, and now you're
Correct.
going to buy them. So you were
Yes.
doing bank loans on every one, though, correct?
Well, I was doing a mix. I was buying some properties cash
Okay.
with the proceeds of the flips, of the high end flips. I remember
Mm-hmm.
were like high, they were good
Yeah.
equity.
Yeah. Yeah.
So some I put large down payments, some I bought them cash, some I got finance, but I
Okay.
tried to kind of like park the money, not the bank,
Yeah.
but
Yeah.
park it in assets.
Okay, gotcha. So that was 25. And then you're like, I feel pretty comfortable and confident. I know the game. I know what I'm doing. 25 times of anything, you start to get the hang of it really quick. Now you're evaluating a 100-unit deal. Break this financing piece down one more time for us so that we really get
Okay.
it.
So going back into these 25 properties that I had in Houston,
Yes, sir.
one of them was an A unit.
Okay.
Okay. And I bought it also the same way, owner terms. I
Hmm.
bought it for $65,000 and they financed me the whole thing. I
That's
bought it for
awesome.
200,000. Now it's worth 650.
Yep.
This is just the power of buying it on time, good
Yeah.
negotiations. As you know, real estate, you
Yeah.
make the money on the buy.
On the
So
buy.
they were
Absolutely.
on the buy, always on the buy. So that was my first small multifamily experience. And then I came across this 105 unit portfolio,
Hmm.
and so so negotiating back and forth, we gone to a final price, right? I was supposed to get a loan, typical with 10% down, 15% down. Uh, and then I just renegotiated because it was just too much of property. It was taking us too much time. And I
Yeah.
thought, let's just be creative here. Let's just do a hybrid here. So I said to the broker, let's split it into two, let's do a bridge loan on this part. I'm gonna pay you the same. I'm not gonna come back and renegotiate with you. I already had a great price
Yeah.
from the beginning. You know. So do you hear any background sound? No, no.
No,
You're
you're
good.
good.
Am I good? Okay. Uh, and then the other portion I was owner terms.
Okay.
Owner terms.
Yeah. So
So
he said,
really, I
"Hey,
closed.
pay me this X amount cash. Use the bridge loan for that." And then the other part is the seller finance. He was carrying the
Correct.
note. You're going
Yeah.
to make payments over whatever terms and
Correct.
that type of thing. Very smart. Very smart.
Yeah, yeah. So he got what he wanted. It
Yeah.
was just we just reshuffled things around a little bit, and I
And he
said,
was happy.
hey, he
He
was
got cash
happy.
in hand, and he still
Exactly,
has cash flow too. So
exactly. So
okay.
I used a bridge loan, and they financed me pretty much the entire part, and then the other portion was owner terms. So I ended up closing with around 150, which is which is really, I mean, this was a $3.5 million deal. I mean,
Yeah,
can't
and you got
can't
in
get
with
any better,
150 cash. I love it. I love it. That's awesome, man.
Exactly. No partners, no syndication. Then the bridge loan was at, I think, 8%. So it wasn't that bad, but the money's also on the cash flow, as you know. So then
Yeah.
the same lender that did the bridge helped me with
Hmm.
the term loan, and I got it for, I think, 4.5% interest rate,
Yeah.
on
Yeah.
that package. And I'm still paying the owner on the other
On his
parts.
note. Yeah.
And there's a twist on this part. So I'll come back to that on later on this twist. But and then so then I closed, and I was, enjoying the cash flows and then just growing, it's like, okay, now what's next?
Yeah.
In 2019,
Hmm.
um, this broker called me. They knew, you know how it is, you close deals, all these brokers find out that you're buying all these assets, and it's like, who is this guy? Who is these people? So you start getting calls.
Hmm.
People research, who are the buyers in town.
Yeah.
So this broker called me and said, hey, sir, you have this deal. Uh, it's been in LoopNet actually, for quite some time. It's a 65 single family portfolio, 65 homes
Okay.
portfolio,
Okay. Yeah.
and
Yeah.
in the same city, and the seller's motivated. It's been in LoopNet for quite some time. It's
Yeah.
off LoopNet right now, but we wanted it. We want, I think, 2.8 million for all the package.
Hmm.
So as you know, money's on the buy. I said, okay, I'll buy it. I'll put a bid. So I sent the LOI, and I sent submit an offer for 850. 850.
Yeah.
So it's like,
Almost a third of what he was asking for.
yes,
So go ahead.
and lowball the whole thing. It was, I said, and I went through the underwriting.
Yeah.
This is not
Everything's a
gonna
good deal
fly.
at the right price. Anything's a
Exactly,
good deal at the right price.
exactly. So I said, I don't know if I'm gonna buy these assets. You've been sitting, for a long time. There's a reason for it. I see a lot of deferred maintenance. I don't know about that. I don't know. I can't pay you 2.8. I and I hate to send you an offer, but it's gonna be a lowball offer. Sergio, I'll work with you. These sellers are super motivated.
That's
They want to
awesome.
get out. Nobody's
Yeah.
gonna get offended, Sergio. Just go ahead and run it up. So I sent him an A50. He called me immediately. Are you serious? I said, you
You
told
got
me.
offended. You told me you wouldn't
You
get offended. No, it
exactly.
offended him.
You said,
I love
I'm
it.
not gonna get offended. So
Uh-huh.
it was hilarious. And he said, come on, Sergio. I said, you said you will not get offended. This is what I can pay, and we can
Yeah.
close in 14 days. Uh,
That's
didn't have
awesome.
the A50 lineup, of course, but I knew that they would not take in
Yeah.
the A50,
Yeah.
and I said, submitted it. Let me know. So he came back 2 days after. Sergio, they are not happy. They got offended, but you know, from the 2.8, we can do 1.8. Now we're talking. Now we're talking. The portfolio was worth probably close to 3 anyways.
Yeah.
So I said, let me see what I can do. Again, the money's on the buy. And then I said, okay, I can give you $1 million. And that stops. That stops. Let me see what I can do. Going back and forth, we closed the deal at 1.35.
All right. All right.
So look at the amount of assets for that price point. It was just ridiculous. So then I started going through the lending process, challenges as always. So I said, hey, Mr. Broker, and I want to say his name. Hey, Mr. Broker, there's just so much deferred maintenance. I can't work on this deal. I don't know. The lenders are not comfortable. We got to be creative here. So we had to do on our terms. And he said, okay, let me talk to them. Let me see what the whole property, all the asset, all the package was free and clear, Abel.
Golly.
And
Wow.
that's when you know.
Wow.
That's when you know you have an opportunity.
Yeah.
You
Yeah.
have an opportunity. The sellers can become banks. Don't be afraid to ask. Don't be afraid to pivot. Don't be afraid to make changes.
Yeah.
More when you have the information. And I knew at that time when I got the title that it was free and clear. And I knew who was the owner.
Yeah.
And the owner was a basketball player. I can't say his name, but he's a basketball player, So definitely he just wants to dispose. He wants to exit. He owned it for 7, 8 years. Probably there was not much depreciation left. So they were super motivated.
Yeah.
So you won't believe this, Abel. So I said, they're open to do owner terms. They want to see what you got. So I submit my offer again, a revised offer. And I said 10% down, 6% interest only for 30 years, due in 3.
Interest only for how many years? And anyways, that's awesome. And then
And then they came back and they took it.
that's awesome. What a small pain. So let me just frame, because we have a few minutes. I really want to talk about your 92 unit. I've had such an
Yeah,
amazing conversation
I'm not
already,
timing. I'm
but
sorry. Are we going over
you're
time?
you're no,
Sorry.
you're good. This is a great conversation. Essentially for the passive investors or first time general partners, right? We're just trying to understand how to get into an opportunity like this. And one of the goals for a lot of teams is try to leverage as much of the bank's money as possible. So they give us 80% of the loan and we bring, maybe 20% down for the property. And then we raise capital enough for renovations. But
Right.
another very creative way is if the properties don't have loans, or even part of it's you're asking the seller to be the bank and you get in on a lower dollar amount, which is on this deal was like next to nothing for a crazy big asset, and then paying interest only for some period of time just allows you to cash flow like crazy. So
like crazy.
It really is a great cash on cash. It's an amazing cash on cash return.
Astronomical.
it's huge, right? So anyways, that's awesome. Hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. In the last few minutes, Sergio, let's transition, because this has been a great story up until now. Even better, your 92-unit multifamily apartment complex. So you took it, and then tell us about this latest deal, man. I'm excited.
So this 92 unit, right? These properties are located in Daytona. There are two apartment complexes, 46 units and 46, same owner. They are like 2-3 blocks away from each other. So it's 92 unit portfolio multifamily. And I got an email from a broker, from a local broker here in Florida, and say, hey, I have this, 12 unit, for sale. I'm not interested in 12 units. I really need to scale, get me something that has more unit count, more sizable. And he says, okay, I'm having conversations with this owner, and I don't have it locked just yet, but this is the address, this is it. So I look at I do my quick due diligence. I'll be there tomorrow. I'm in Palm Beach now. From Houston, I moved in Palm Beach to 2018. I didn't say the transition, but I'm in Palm Beach, Florida right now. And I want to focus in Florida because I'm kind of, that's my turf, But anyhow, so I next day drove to Daytona, toured the properties, and submit the offer. That was in the midst of COVID, Abel, and you know how challenging it's been last year. I mean, I submit the LOI on April, May. I mean, we were in lockdown.
Yeah.
I mean, it was pretty brutal. So, I mean, when we were getting caught up on the news and all the frenzy of COVID, I really was trying to focus into getting my first multifamily. So I negotiated a deal where, again, I found out that the properties were free and clear.
Yeah.
I mean, this is deja vu. This is deja vu, Abel. I mean, this is like, it's like, I can't believe, but I love crafting deals. I love putting deals together. This is my passion, So anyhow, put a contract, and we negotiated where the seller was carrying 30%, and we were coming with 65%, and I was coming with 10-15% on my own money. So back and forth, lenders were very skeptical, as people were like on the fence, lenders were on the fence, and I was just trying to get a bridge loan to get me to a position that I can refinance. Again, I haven't syndicated, mostly I use debt on my own money, or sellers become the bank. So, I was just trying to craft something like that to where I can use my expertise into getting into the right deal. 100% occupied, huge value add, rents below $150 to $200, and the potential of that. You multiply that by 92 units. You're talking about,
what are the cap rates in that area?
I think it's 6.
Or for this type of property? Okay, 6.
Yeah, 6.
Okay.
6. So anyhow, get through the loan. A couple of lenders approve it. Then they bail on us. And in parallel, I was trying to do a refinance on my portfolio so I can get the capital for the down payment. I was coming up with 15% down. I had the equity that I built through all these years. So I'm like, I can fund myself. I don't need to go and syndicate. Nothing wrong with syndications, but I wanted to do it myself and set that platform for future larger multifamilies where now I can syndicate. I wanted to kind of like be already on this space. So my goal was to come in, with no partners, no syndication, But it was very challenging trying to do appraisals in the midst of COVID for all
Yeah.
these assets. It
Yeah.
was just impossible. I got the loan approved, ready to go to do the cash out. I was cashing out a lot of money, but it was very time consuming. I just couldn't do it. And then I went to Europe for 2 months. My wife is Irish, and we were for 2 months to Ireland, and for a personal matter. And while being there, I was just trying to source the deal. How am I going to close it? How am I going to close it? And I remember my friend Jeremy, actually I met at Rods event. I mean, that's how we met, Abel.
That's
We
how
met
we
at,
met.
at
Yeah.
Rods. Yeah. And I said, hey, Jeremy, I have this deal that I've been working for months. Now it's October, okay? And I did a couple of extensions. So I had time to do what I needed to do. And I say, hey, I'm trying to raise some debt on my portfolio. You know any private investor that wants to come in, and I'll give them great returns. I need the down payment, close to $1 million down payment. And he said, okay, I have a couple of guys that I know that I got just sold a lot of stock, and you can imagine, So he talked to him, introduced me to him. We all start, brainstorming, talking about it. I said, this is my portfolio, all my assets, the equity is there, and I was just trying to get the right terms. And he said, I love your portfolio. There's great equity over there, but I love more your Daytona deal. So let's see how we can all work together and do it like a joint venture here, So I was able to raise $1 million by doing that. And, we're all active. And, when you do a joint venture, we all have to be active. So that was the agreement, that we all have to have a role, we all have to be active. So we got the loan ready to go. And a week before closing, Abel, the lender bailed on us. You know what?
Now is something always happens, and
Something always happens. The underwriting was the underwriter was a nightmare. I mean, the guy just, we just didn't click. There was just a lot of, misunderstandings. I think that they were cherry picking their loans towards the end of the year.
Yeah.
And, so they were like, well, we need more down payment. And I'm like, I'm already coming up with this money. I mean, I'm paying higher than bridge rates. I mean, we're paying 9%. It was crazy. The rate was just too high. But I said, okay, we'll just, we'll refinance, in 6 months, we'll take the hit. So that was on a Friday. On the weekend, I talked to my broker and said, hey, Mr. Broker, we got to do something here. This is the situation. We have almost $1 million, because I got 850. I got almost $1 million. Why we need a bank? They just deal directly with the owners. Let them send them, mailbox money every month. It's free and clear. We'll close on Wednesday. We got it. Let's do it.
Yeah.
Oh my God. That weekend, my wife didn't see me. I was just like, crafting text messages, how to engage. We were masterminding, virtually with the brokers, trying to come up with a strategy, with the text messages, because these sellers would not talk to you. It was all text message. So anyhow, we proposed them $1 million down at a 5% interest rate on a 30 interest only for 2 years. Oh my God.
Yep.
And they say, how soon can he close? Oh my God. That was it, Abel. That
Like
was
tomorrow.
it.
Tomorrow.
Oh my
We can get
God.
to the closing table.
Exactly. So so they agree. We did an amendment. I said I'm closing on Friday, next Friday.
There you go.
We need to get the paperwork ready to go. Talk to the lawyers. We have everything lined up. So I went back to the group and said, okay, we raised 850. We need an extra 200 to get to the finish line and have some capital for the capex.
Yeah.
There's a twist here. There's a twist here.
Yeah.
So my capital partner said, okay, let me talk to my family. Let me make sure that we're aligned. I already commit for this much, so, there's just, you're asking for a little bit more, but I understand the value of going this way versus going with the lender. So, so he said, okay. So I follow up with the team. No results, no answers. Thursday comes, my lawyer calls me. Sergio, we're closing tomorrow. Are you ready to go? You have all the funds needed. And I said, I'm still short. I'm still short. I'm working on it. I'm still short. Um, he said, Sergio, you've been a great guy. I think you can sense it, Abel, where it's coming. He said, you've been a great guy. I really love working for you. I mean, this is a top lawyer,
Yeah.
top lawyer. This
Yeah.
is the lawyer that you want to get to know. And he said, you're working very hard. You really work your butt off on this deal. You earn it. I just closed 2 large deals, and I'm gonna give you the money to close. You just pay me the same 5%, and you pay me at the end. You don't have to pay me now. You just pay me at the end. I'll draw the documents for you, a second note for free, because I'm doing the first, and we'll get to the finish line. How about that? Oh my God, I got goosebumps. I mean, I was like crying pretty much, on the phone. I couldn't believe it. I felt so blessed. I feel so grateful, for his kind words. It wasn't about the money. It was just him trusting me,
Yeah.
and
Yeah.
this relationship. And you have relationship with everybody, multifamily is a team sport. Real estate is a team sport. You cannot do it on your own. And
Man.
I just felt so grateful and so blessed that he was just giving me this last push. And I said, of course, let's do it. Let's close. So he wired the money, send the document. Friday, I closed.
Man, that is awesome. This power of relationships, power of
Amazing.
creativity, the dedication, the persistence, the hope and faith that you put in it, and then just keep driving it, the will to get it done no matter what. And I was
No matter
talking
what.
to somebody, another smaller team, and actually this conversation, I was like, relationships are so valuable.
Mm-hmm.
Networking is absolutely where your net worth is. And this world is pretty small, our commercial multifamily world. And if you're working with one attorney, one team, and whatever, it kind of, it gets around pretty quick. And, if you can keep and establish that trust and work with others in this manner, you're going to have, many doors open to you. So that is amazing. Sergio.
It was amazing. And then when I went back to the group with the news, of course they were
Yeah.
super excited, and they
Yeah.
say, by the way, we got the money lined up. So now that extra money that I asked them to bring is going to help us to have a reserve for the capex. So it's win-win.
Yeah, I know. That's awesome. Well, Sergio, we're at our time. We have to talk again. That's for sure. I have to bring you on another show to dig in on
Thank you.
any number of these topics, but let's make sure that we give our listeners, now you are syndicating, now you are
Yep.
raising capital, now you are trying to
Correct.
put future deals together. So if anybody wants to reach out to you to potentially invest in some future projects, where's the best place they should go? How do they reach out to you?
They can go to my website, worthavenuecapitalgroup.com. They can reach me through my website, or they can just, have my cell phone. Can I give my cell phone?
Absolutely. Whatever you want us to publish, we'll publish.
Yeah. Well, maybe just a website for now. Maybe just a website. Maybe just a
Yeah,
website.
that's all good.
And my email is Sergio. My email. Can I give my email?
Absolutely.
Sergio at Worth, AVEREI.com.
All
Like
right.
Worth Avenue Real Estate, but just AVEREI.com.
And we'll connect that and link it in the show notes. And it was amazing. I really enjoyed this episode. You've lit my motivation up to even get even creative on these larger deals as well. And I appreciate your time. And is there anything else we didn't touch on, or you're hoping that we got a chance to talk to before we leave? Any
No, I
last
think
final word?
I think that, again, if I would have not gone to that multifamily event, I would have not met you, Abel. It all comes down to that. You really have to take action. You're sitting waiting for things to happen, that they're not going to happen. You really have to be proactive, and be relentless, because
Yeah.
things are going to happen to you if you are relentless. So congratulations for your show. By the way, you are all over, great content. I listen to your podcast. I mean, you guys are on my follow group. Go to Abel. I mean, great content. And your inspiration story too. You're kicking ass. You're doing great.
All right, brother. Thank you so much. I sincerely appreciate it. This has been an amazing show, my friend. And again, my name is Abel Pacheco. I'm your host for the Five Talents podcast. If you want to hear other amazing stories, just like Sergio's, please subscribe to the podcast. Give us a 5-star review if you thought it was amazing. If you didn't, I don't know, you're missing something, or leave us a written review on how we can improve. But I appreciate it. And Sergio, thank you so much for your time. I really appreciate it.
Take care, bro. Take care, bro. Thank you.
Thank you for listening to this episode of the Five Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the Five Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the Five Talents podcast.